We're beginning this show with markets. Markets are rallying and they continue to rally. This is the sixth consecutive day of bulls raging in Dalal Street. Suyash, how exactly did the markets close?
So, Shweta, in today's session, markets continue to move higher as we saw stock-specific action taking precedence, as the earnings season is on. And Nifty closed just shy of the 20,000 mark for the very first time. Now, the buying interest was seen in banking, pharma and FMCG counter. At close, Sensex was up 474 points to close at 67,571 levels, and the 30-share index touched an intraday high of 67,619 and an intraday low of 66,831. Now, Nifty ended 0.74% higher at 19,979 levels. It touched an intraday high of 19,991 mark and an intraday low of 19,758. Now, the broader markets underperformed the headliners. Nifty Mid-Cap 100 was up 0.25% and the Small Cap Index was up 0.37%.
All right, and I'm looking at earnings season, and Infosys was expected to announce its first quarter earning today. We're given to understand numbers are out. Do you have the numbers with you just as yet?
So, Shweta, Infosys shares, the numbers are out. From at least what I can see, the net profit has risen about 11% and is under the expectations to about 5,945 crore. The numbers are going to get updated in a short bit of time, but Infosys today closed 2% lower ahead of the expectations. Now, the market was obviously expecting a muted quarter for the IT bellwether, as has been the case with other IT majors like TCS, HCL and Wipro. But the focus will be on the order book of Infosys and how their guidance comes out.
All right. Guidance we're given to understand stands revised downward for the financial year 24th. It has Infosys, in fact, first quarter has met street estimates. There's been a sharp decline, as I mentioned, in the revenue guidance. I am looking at numbers that are coming in right now. We continue to bring you all those numbers. Annual growth is now expected between 1 to 1.3%. Earlier, the guidance was approximately 4 to 7%. This is, in fact, a trend across IT majors. There is muted expectation globally, and this could likely continue in the coming year ahead.
No, Shweta, one of the things that we need to see that we are coming, like the first quarter of the financial year is the strongest quarter generally for the Indian IT companies. Now, because of the banking crisis in the US and Europe, there was, the big clients, so the big clients of these companies deferred their discretionary spending. But now what we need to understand is that Infosys, TCS and other IT bellwethers are in the business of enterprise tech, right? So regardless of a small drawdown in the order book, their regular business, enterprise tech continues to give them good results.
All right, and remember, IT Pack has been a major gainer on the back of good or at least expected results from companies so far, including TCS, HCL and now Infosys. We will of course bring all those numbers to you. How has the IT sector done today? How has the pack performed today on Dalal Street?
So, all sectoral indices barring Nifty IT, ended the day in the green. Nifty IT was down about 0.66%. Now, again, the expectations was of a muted earnings from Infosys, and that is why the IT sector has underperformed today. But also we need to understand that the IT sector was also driving returns over the past 2 weeks and was one of the major gainers in the Nifty, among the sectoral indices on Nifty.
All right, and another earning that we are tracking today is with respect to FMCG major HUL. HUL has also come up with its results. We're given to understand the revenue is up 6.1% to the tune of 15,148 crore rupees. Now, I don't know whether this is in line with expectation. We of course continue to get you those details as and when they emerge. They are emerging as we speak, but FMCG sector particularly, I want to know how FMCG stocks have performed today, this morning.
So FMCG was among the top gainers today. It added about 1%. Now the expectation was that we will see volume picking up on a better demand outlook, and the commodity prices, which have softened over the past few months, will help the company post a better better margin numbers. Also the rural demand, Shweta, has been picking up, which is making analysts more optimistic about the upcoming quarters for the IT for the FMCG sector.
All right, rural demand picking up is a good sign indeed, and net profit is up 8% for HUL, the FMCG major. Margins up about 23%. Numbers are looking good. They're stacking up well for at least the first quarter for FMCG. And in fact, FMCG sector largely an indicator of how consumption is being driven in the economy. So if these numbers are anything to go by, consumption and the macro picture is looking well, panning out well so far.
Also the demand has been picking up constantly over the past 3 or 4 months, and we have seen that inflation is coming down, so the margin was expected to improve for the IT companies, and at 23% it's great for HUL.
And given that consumption is up despite high inflation in the first quarter, inflation above the 4% mark, we don't know how second quarter is going to pan out so far, but first quarter of the year so far, with all the results that have come in cumulatively, has done well, has augured well.
Yes, especially, and when we are talking about inflation, despite it being high, has continued to soften month over month, right? So over the next few quarters, the margins are only expected to pick up for the FMCG sector.
All right. I before I let you go, I also want to understand which were the top gainers and losers in the market today.
So, Shweta, when we are talking about sectoral indices, Nifty Bank, Nifty FMCG, Nifty Pharma, and Nifty Private Bank all added over 1% in today's session. Now, among individual stocks, ITC was the top gainer in the Nifty pack today. It rose about 2.78%, followed by Kotak Mahindra, which was up 2.64%, and ICICI Bank, which gained 2.28%. Now, on the other side, Reliance Industries fell about 7.81%, but then again we know it was because of the demerger of the Jio Financial Services Limited business. Infosys, which was expected to again report a muted set of numbers for the quarter ended June, ended 1.73% lower. Ultratech Cement was another top loser today. It fell about 1.26%, and HCL Tech, which was around 1.13%.
All right, I quickly also want to touch upon Reliance stock, because it gave me major, it spooked me. It gave me a major fright this morning when I saw my share value had dropped significantly, or shares that I had bought last evening. Where are we looking at Reliance shares heading today? And with respect to Jio Financial Services, we understand the listing hasn't happened today. Just that's a quick clarity. Listing is expected to happen later, but the demerger process is now complete. Where are we as far as Jio Financial Services is concerned?
So Jio Financial Services will be part of the Nifty pack, and that is just to maintain the entire overall composition of Reliance Industries. Now, the expectation is that the date of listing of Jio Financial Services will be announced in the upcoming AGM, and at least the market is expecting it to be listed within a period of 2 to 3 months. Now, Jio, the market was expecting Jio to fetch a price of about 160 to 190. It outperformed all those in today's special opening session and was assigned a price of 261.85 rupees. Now, what this means is that whenever Jio gets listed on the stock, like the first opening price would be.
Would you not say it's not? Are you saying it's not listed today? I just want to clarify that for the benefit of viewers. It's not listed today. It's not up for trading, but it is listed today.
Yes. So you can see it. So basically, what's happened is that it's a standard merger and demerger procedure, where to maintain the composition of the entire Reliance for the Reliance Group, they have kept Jio's price constant at 261.85. Now, it will continue to be the part of the Nifty pack and the other indices, other 18 indices Reliance is part of, as long as a listing date. So, after it gets listed, 3 days from then, it will start trading. it will start trading, and the constant share price will fall off the bracket.
All right. So those, of course, are big updates that we're tracking as far as Sensex, Nifty, Dalal Street in general is concerned. We will, of course, bring you all those updates tomorrow morning as well. Suyash, thanks very much for joining with your inputs on that story. Shifting focus for now, India's pre-owned car market is booming. Cars24, the platform that facilitates selling of pre-owned vehicles, said that it sold vehicles over 1,800 crores on its platform in April to June quarter of this year. The platform released a report saying that the quarter has witnessed a surge in demand for pre-owned cars, or second-hand cars as we call it, with as many as 30 vehicles getting sold every hour during the period. This, of course, is according to the report that was released by Cars24. Now, the platform in particular says that there's been an impressive 87% leap in sales for them compared to the same period last year. And hatchback models continue to dominate total sales with 62% share. Sedans made a comeback as well. We don't know where SUVs are in all of this, but sedans and hatchbacks have the major share of the pie. Interestingly, non-metro cities are challenging the dominance of metro in car purchases, especially purchases of second-hand cars, with Pune and Ahmedabad experiencing a surge in sales of pre-owned car. This and more as per the report from Cars24. We have Gajendra Jangid, who is the founder and CMO of Cars24, joining us with more information on that report. Also with me in this studio is my colleague Krishna Kumar. Gentlemen, appreciate you both taking time out. I want to understand from you, Gajendra, what does this report really entail for people and the aspirations of middle class India? I think for me the big takeaway was what I mentioned, that as opposed to metro cities where you expect more cars to be sold, it's the non-metro cities, tier 2, tier 3 cities that are buying more, pre-owned cars.
Yeah, definitely. The market has been, responding very well. And the surprising part of these numbers are that this quarter, April, May, and June, is usually a little lull quarter for the auto industry. As we start the festive season from July, August, and September period, AMJ has always been considered as a quarter where the action is not so much. However, what we have noticed that there are consumers who are looking to buy a used car in large numbers. And that's seen that more and more customers right now are looking to buy used cars in the market instead of perhaps buying a new car, or maybe upgrading themselves to something else. So definitely, market is catching up. The consumers are now looking for choices. And just to throw you one data, around 80% of the customers who are buying cars right now are the first-time car buyers. So you can just imagine. The amount of Indians who are currently want to own the car, who are perhaps, being upgraded from owning a bike to, moving to a car. And I would just like to call out, why this shift is happening. And year on year, what we are seeing, the demand for the used car is, continue to increase. The one thing that I would want to call out, which is impacting, is the market is getting more and more organized. So back in the days, the customer was really, hesitant to really, transact in the used car, because they usually prefer buying a new car, or perhaps, do not buy at all. Primarily because of the fact that there is a, lack of trust and transparency in the sector. However, like players like Cars24, we are organizing this market, and when we organize this market, we bring more trust and transparency. And what I mean by that is that we are able to provide the quality of cars that runs as good as new. So when you kind of don't have to worry about the car which you are buying is a used one, and if it performs as good as new, then you kind of would want to inch towards buying a used car, because primarily it's a better value for money. As you must be knowing that once any new car hits the road, the 10 to 20%, the price on it shaves off when it becomes part of a used car market. So definitely the customer looks for better ROI, but more importantly, what they want is that the car should not give them any trouble. The car should be, run as good as new. Mm-hmm. And, there are many interesting factors that are happening in the used car ecosystem that is pulling more customers. And I'll just, highlight a few examples that the Indian used car industry in particular has been, lacking a good financial ecosystem. Okay. If you compare like to like in the new car, over 80% of the car get financed, But in terms of used car, only 15 to 20% cars get financed. So you can see the market is heavily underpenetrated. And Cars24 also holds an NBFC license, and we finance the used car at what we sell to the consumers. And we clearly see the huge rush of customers who are looking for access to loan to buy a used car. And our penetration on the cars that we are selling to customers is as close to 55%, which currently stands. So affordable. So customer can afford the car due to the capital that is provided by players like us. They are getting better value for money. The quality of cars is keep on getting better, and more importantly, also like player like us are also giving a big big confidence to the customer that they can also return the car if they don't like within 7 days. So you can just drive the car around for 7 days, and if you don't like the car, if you don't fall in love with the car, you have an option to give it back with no questions asked. So a lot of innovations.
I want to understand from you in terms of absolute numbers. You say in the report that you've sold cars worth 1,800 crore rupees in the quarter. But could you give us a number? Is there a fixed number as to how many cars you've sold? And do you have an industry estimate as well?
Yeah, we sold roughly close to 60,000 cars in last quarter, and I think we have roughly close to, I would say, 5%, 5 to 6% market share. So you can just multiply that number, and we must have sold, in last quarter there must be around 12 to 15 lakh car must have, got sold in the entire India.
All right, and this is very interesting because in last quarter numbers that we have, overall India sold 1 million new cars.
Right.
And if we've sold 10 to 15 lakh second-hand or pre-owned cars, that number is bigger than the new cars that we've sold.
If I were to ask you just one thing, on this front, you're talking about improvement in penetration of financing for the pre-owned cars. There's also technology, which is also playing a crucial factor in the rise of the purchase of second-hand cars in the country per se, and accessibility accordingly.
Yeah, so the one thing which is unique about used car versus new car, like if you are going to buy a new car, you know exactly which make, model, and the variant and color you would want to buy. But when it comes to used car, you're always limited by the choices what you have in your hand. But however, that is not the case as the market is getting organized, and if you choose to buy a car from Cars24, because you get thousands of options to choose from. So your chances to find the car of your type, your budget, your color goes very high. So the access to the inventory, the access to the choices are in a way unlimited. So that's not the case how it used to be before, because you were limited by the choices with a small dealership that is around you, but that is not the case anymore. So of course affordability is solving the problem, but at the same time, like you rightly said, the access to the right car at the right place at the right time is also an important factor for this category to grow.
So if I were to understand these numbers correctly, you're saying that 10 to 15 lakh pre-owned cars are sold in a quarter, and we are talking about perhaps the last quarter. This number, Gajendra, for the benefit of our viewers, it's bigger than the new cars that are sold in this country.
Yeah, definitely, it's bigger. So used car are roughly close to 40 to 50% higher than the new car. So last financial year, India recorded a highest new car sales that is roughly close to 3.8 million units. That's around 38 lakh. So that amounts to roughly close to around 9 lakh, 9 to 10 lakh units per quarter. So you can clearly see that the used car sales are roughly close to 40 to 50% higher than the new car sales.
All right, and another interesting, I think, number that I have seen in that report that you sold out is the number of cars that are sold per hour. And my colleague also pulled up the fact that it's becoming increasingly important for people to own a car that they can easily finance, and sometimes it's easy to finance a pre-owned car, and hence the reason why perhaps, Krishna, more and more people are going for pre-owned cars.
That's what the report sort of indicates. Definitely, that's the other reason I'm saying about technology, because one is financing being available and technology making it easy to access that financing as well. And you have a platform like Cars24, for example, being able to do these things like, give the 7-day return. It's almost like, how e-commerce websites have drawn people to buy things online. Now you have a return policy, you get a discount, you get quality assurance, all those things which made people trust, say, the e-commerce business, and the kind of incredible adoption that you witnessed in e-commerce. Now everybody buys everything from everything online. Similarly, I think because there's a trust factor involved over here for people to buy already used cars. I mean, we're talking about it in the age of pre-loved clothes going on sale, Shweta. They're called pre-loved because they've been worn before. There's a new trend picking up on pre-loved clothing, and even as a trend for pre-loved clothing picks up, pre-owned car sales are hitting their own peaks in the country. It's very interesting, and I think it's a combination of both both financing being available and technology making accessibility, making used cars more accessible, making financing more accessible. Isn't it, Shweta?
And another interesting thing that I think stood apart for me, and Gajendra, I'd like to bring you in here once again, is what kind of cars people are preferring. People continue to prefer hatchbacks, and this is quite in contradiction.
Yeah, where are the SUVs?
Where are the SUVs? I mean,
because everybody wants an SUV is what we thought.
And when you look at the sales of new cars, the pie or the chunk of SUV is far larger at almost 40%. But when it comes to pre-owned vehicles or second-hand vehicles, it seems that people are still buying for a smaller car. Perhaps these are the people who are aspirational in small cities where a small car makes more sense. Am I correct?
Yeah. So let me just call it out a few numbers here. So if you know that SUV used to be, less than 30% share back before 2020, right? And in last 2-3 years, what you see a rise of SUVs in India, right? Now, and I'm talking about new cars right now, and the new car, the SUV has captured close to 50% market share. However, when you see the used car ecosystem, right, on an average, the customer changes the car every 5 years. So after 5 years, that those cars are coming to market to be exchanged or to be sold or bought and sold. So you see that like SUV, even in the new car segment, has grown. However, the same wave to really translate into used car ecosystem is going to take time. So we are seeing a rise of SUV, but still it is not as much as it's how it's been right now, sold in the new car. I think our share of SUVs in the overall right now has grown. It's also growing, by the way. I'm not saying it's not growing, but it's not as much as what it is in the new car segment. I think it's going to take at least a couple of more years till the time SUVs also become the king of used car as well.
Okay, and I also want to understand from you, and this is perhaps that strikes out as important takeaway for me from this report. I want to know, what is the average price? I don't know if you've already touched on it, but what is the average price of a car that is traded, second-hand car? What would be the average price?
So the average price stands somewhere close to 5 lakh. So that's the price consumers are buying and selling pre-owned cars. And I think that is the average price of a new car roughly close to right now is around 8 to 8.5 lakhs. So you can see the average price of the used car is roughly close to 60% of average price of a new car.
Mm-hmm.
Right, and I also wanted to ask, the 7-day return policy is a fascinating idea to draw people in, but isn't the entire game about building trust amongst consumers that you can come here because this is not cheap. These are fairly high, big ticket investments for the average Indian household. So the trust factor is important.
Yeah, exactly. So while the 7-day return policy looks very, very interesting and very catchy, but if you see behind it, right, that shows that the brand is so confident on the car that they are selling, right? So even that 7-day return policy, they are ready to give it out. And by the way, we don't charge anything for this policy, right? It's been given by each and every car that is being sold. So it just drives that trust and confidence in consumers' mind that if they are buying car and if the seller is ready to put the skin in the game of taking the car back after 7 days, if the customer is not satisfied, then that's like a sweet deal.
And you mentioned the average life of a pre-owned car is about 5 years, which is when
that's when the customer
perhaps an owner starts to dispose it off.
Yeah. Yeah, that's right. So after every 5 years, you can say customer is upgrading to a new car, or the owner is selling car. Yeah, that's right.
Right, that's as good as a mobile phone. Almost as good as a mobile
All
phone.
right.
Mobile phone.
I mean, it
Mobile
is.
phone
I
you
mean, think about it.
All right. I think, Gajendra, we'll let you go. Thank you very much for those insights. It's lovely speaking to you, but the second-hand
Likewise.
car market continues to fascinate
Well,
me.
well.
At least personally, I continue to be fascinated by the second-hand car market. But shifting focus for now, it's the end of password sharing for Netflix users. Netflix on Thursday announced that only members of a household will be able to access a single account. If anybody else outside of the household is using the account, they must transfer their profit to a new account for which they will have to pay and consider changing their password. With that decision to crack down on user sharing passwords with people beyond their immediate family members, the company seeks to shore up revenues. In fact, Netflix in May imposed restrictions on password sharing in as many as 100 countries, and the crackdown helped the company add nearly 6 million subscribers globally. What is the impact of password sharing and the rights that have taken away will be on an average Indian family? Let's discuss that. We have Karan from Elara Capital joining us at this point in time. Karan, good afternoon. Thanks very much for taking time out. I quickly want to begin by understanding what's the impact that's going to be on average consumer, and how much and how many more accounts that the company plans to add through this initiative in India specifically.
Hi. So if you look at Netflix, what they've done is, something very innovative in terms of password sharing. I think globally this has been a phenomenal response because they've added close to 7 million subscribers in the first half of CY23, as compared to last year, wherein they lost out around 1.5, 2 million subs, and everybody thought that Netflix has kind of peaked out in terms of subscriber base. So they've got multiple layers of growth. The first leg was in US when they were expanding market. Then was a launch in various nations. And now, there's no growth driver as such to drive a higher subscription base. And that's why they've got this thing of password sharing. And the other way to monetize revenue is also the advertising revenue, the ad supported model, which is going to be launched. Now, the impact in terms of India per se is that we will definitely see some respite in terms of the broader subscriber growth. But India market that way is very price sensitive in nature. So whatever is followed globally in terms of a large number of subscriber addition because of password sharing kind of being restricted, or moving on to paid password sharing, we may not see that kind of a big positive delta in India market, right? Because the competition is very high here. There is always a customer who will kind of resort to piracy in some or the other way. So definitely it's a respite for their India subscription revenue, but whether or not this can be the only big growth driver, that is a question mark. I think second thing what we have to see to really track Netflix growth is the subscription growth excluding this impact. So there are generally two drivers for the subscription video on demand revenue growth, which is addition of subscribers, and the second is ARPU. I think the second leg of growth, which is ARPU, I think that is a big challenge right now because the market dynamics are changing completely post Jio Cinema launching IPL free. We've seen, Star, they are going to offer World Cup content free of course. So I think it's going to be very tough for any kind of the competitor platforms to take any kind of a price hike. On the other hand, you've got Netflix, which is the lowest as compared to the global, other countries in terms of the monthly ARPU pricing. And the pricing obviously cannot, come down further from here on. So all in all, there is some respite, for the broader growth numbers, but can this be like a very big delta? I think that is a question mark.
Okay, I understand you've got a flight to catch. So I have just a very quick question to ask. Is Netflix looking at losing subscribers?
I don't think they would lose subscribers. As I said, there will be a potential positive impact, but it may not be as big. So let's take the example here. For example, you've got, 3 households using the same password. In some of the instances, what will happen is that out of the 3 households, 1 household moves out and the other household actually ends up paying for subscription. So you have an advantage there. At some instances, you'll probably have 3 set of households, and out of that, 2 of them will just move out and resort to piracy. So the impact is going to be mixed, and it's not going to be like a big delta impact as you've seen globally, because addition of 8 million subscribers on a base of 240 million is like a very large number, given where Netflix is kind of been in terms of penetration. And I think to give it to the point that Netflix does not have too many growth drivers in India, because even the ad-supported model cannot actually scale up aggressively in India because the pricing is low, the ARPUs are very low. So if the basic plan today is 149. I don't foresee them cutting prices to 80 rupees, 100 rupees for the ad-supported model. Globally, the ad-supported model can drive scale efficiency because globally the ARPU is high. So you can have an ad-supported model at a lower price. So I don't even see Netflix kind of cutting ARPUs because of ad-supported model.
All right, Karan, appreciate you taking time out this afternoon. Interesting takeaways. Krishna, and for me, most importantly, although there may not be a big delta and a jump in customer base or the revenue that Netflix will shore up, essentially reasons being the prices that Netflix offers in India are already very competitive. There is a huge competition in the market by the way of other OTT players. So with this move, one thing that Netflix will definitely attract is a lot of...
Right. Shweta, the thing is that surveys have said that nearly 1 in 3 Indians share passwords on OTT, and they don't think it's a problem. It's perfectly fine. Whereas the industry believes that it's not the big players like Netflix and Disney. They have regional OTT platforms in regional languages. When they are trying to launch their own OTT platforms, they know how harmful password sharing can be for profits. So the problem here is that password sharing is not a problem of just Netflix, but the entire OTT industry per se. The thing is that unlike Netflix, which is entire business model is just built on the OTT platform route, be it a Disney Star or be it an Amazon, this is part of their business. And they are yet to come up with any concrete steps. And industry analysts say that it needs a unified action from across OTT players in the industry to somehow crack down on password sharing, because what password sharing does is definitely bring down revenues. Imagine 1 in 3 people who log into a Netflix are using a shared password. That's a big number.
Big number.
So hence, I think what will happen with Netflix doing this kind of a harsh measure, and it's because it's logical that Netflix doesn't have any other business that it can rest its laurels upon. It has to find the best way of monetizing its OTT platform business, and hence it's taking these drastic measures. And will it be unpopular? Yes,
extremely.
But the question is,
and a reason why, because and it's interesting, important to point out that Netflix did add about 600 million, as Karan was also saying, 600 million new subscribers on an already firmly larger audience base, and in Western countries. But in India specifically, where every penny is counted, every rupee is taken into account, 1 out of 3 people actually share passwords. You're not expecting all of them to suddenly start subscribing individually. My concern with this is, you've got to have a shared internet, and I may be living away from my home or my parents or my husband, and we're maybe on different bandwidths, different internet, in which case within a family, within a household too, we're not able to share passwords. Becomes extremely difficult to maneuver these problems.
Right. I think we're at a very early stage in terms of finding a solution to make sure the money, there's no spillage of revenues for the OTT platforms. Because let's face it, they ain't having a great time in terms of their own profits, and that's the reason why you're seeing the prices, OTT prices remain at what it is. And whereas a company like an Amazon or a Disney or other players are able to deep discount based on their own business models. And that's the point I'm trying to make, Shweta. This is okay for those companies. These huge behemoth OTT players are also in the OTT business per se. But what happens in OTT as a platform is not just meant for these big behemoths. You're going to have regional Indian OTT players coming up across in Tamil and Gujarati, and they already exist. In fact, there is an AHA, which is a Tamil and Telugu OTT, exclusive Tamil and Telugu OTT, no English content whatsoever, pure language, general entertainment content. They can't afford password sharing. They want every subscriber in the country possible. They make original content. Tons of money gets spent making original content. The logic is that viewers should view it, people I think should view it this way. You don't want to go spend money at the movie theaters. The movies at the movie theaters are not going to be like the ones that you want. Right?
Absolutely.
If you want to drive consumption, learn to pay for it. Be it news or OTT content. You want better news, learn to pay for news. You want better OTT content, learn to pay for good OTT content. That's I think that should be the message for the people at least, because
Okay.
instead of, because you're going to pay.
You want good content, pay for it. Full
Yeah,
stop.
I mean, starting with us.
Absolutely. and remember, Netflix did shore up additional revenues in the second quarter of the calendar year. Globally, we don't know whether this will happen for the India business as well. I mean, all hopes are that Netflix, of course, with this move of banning password sharing, is hoping to shore up revenues, is also hoping to onboard new customers. We'll, of course, have to wait and watch out for when that happens. But moving on for now. Google is back in news after facing the Competition Commission of India for antitrust activities. Google is now up in arms against OTT platforms, which are taking the foundation body that represents streaming players in India has approached the CCI, or Competition Commission of India, to challenge Google's app billing policy. The industry body says that Google's commission fee is both unjustifiable and harmful, and that its policy could put an end to smaller OTT businesses and channels, and those especially in the content curation business. In the matter of Disney Hotstar, remember the Madras High Court also granted an interim injunction to Disney Hotstar, directing the streaming platform to pay a lower commission of 4% to Google for using its in-app payment system. But this is a temporary relief. It's only given to one player. Other players are currently up in arms against Google. Nikhil Pahwa, who is the founder of MediaNama, joining us to talk more on the story. Nikhil, good afternoon to you. I want to quickly begin by asking, what exactly are OTT players demanding?
Shweta, actually what's happening with the OTT players is that they want this, and this is what pretty much the entire industry is demanding, that the CCI's order, which essentially said that you need to have a separate billing system which allows these apps to do billing off the Google Play Store to be allowed to function independent of the Play Store. Google's contention is that they are essentially in compliance with the CCI order, and all of these players that have gone to court, I think there are now 15 companies, they're saying that CCI is not in that Google is not in compliance. What Google has done is that they're basically charging a certain percentage, like they have to pay anything they have to pay Google anything from 11 to 36% commission if users pay for something, let's say for a Hotstar subscription, for using a third-party billing system. But if they use Google's billing system, then they have to pay 15 to 30% commission. So broadly similar. And the contention is that why is it that you're not allowing us to bill independently altogether? And why are we being forced to give Google a commission when we are subscribing to something? So there's matrimony.com, which has been leading this push, in fact, since the very beginning. There's An Academy, there's Trudy Madly, there are a bunch of these OTT players that have also gone. And at the core of this is that, I remember I was talking to a founder about this when the issue first began, and they were saying that, look, here's the thing, I acquire my customers using advertising, and most advertising in India is Google or Facebook, so Google gets my money, and then when I've acquired the customer, then even on the transaction they want a cut of that. So then what is left for me to run my business? And I think that's a fair point, that these players are making.
Absolutely. A very fair point. I want to break it down for the benefit of our viewers. So let's understand and let's assume that a consumer, me or Krishna, pays 100 rupees to Hotstar for, consuming their content, of which almost 36% goes back to Google. Is that correct? Is that the commission?
Well,
36 rupees of the 100 rupee.
So currently, the plan was up to about 30% could go back to Google, and right now that's the thing. But with the order, Google will only collect 4% commission right now.
Okay, but that's particularly for Hotstar, not for other existing OTT players.
It's for all billing that happens on the platform. See, the stay order or whatever injunction they've received at the courts is only for the companies that have actually gone to court. So essentially, what's also happening is that some of these companies are trying to get others to also go to court, because when there is a large number of players, then the court takes it a lot more seriously, saying that everyone's impacted, and everyone who goes to court can potentially, on the basis of others receiving some kind of relief from the court, will also get it, because the complaint is the same, the grounds are the same. right? So which is why you have 15 companies now doing this. So it's the disproportionate amount of money that all of them are challenging. If, let's say, I haven't gone to court, then I will still have to pay this large amount.
Right. Nikhil, if I were to ask you, there needs to be global standards for these things, right? For the way an OTT platform is charged, it's Google we're talking about. Same platforms exist with geo-specifications in different geographies and territories. How come we don't have a uniform way of what percentage an OTT player charges per geography?
That's a great question that actually started this whole problem. So what had happened was that so in the US, this commission was being charged. In India, it wasn't being charged. And so there's a company called Fortnite that went to court saying that they shouldn't have to pay Google this commission. So they went to court against Apple as well as Google. And there are other companies like Match.com that have also done that. Now, Google, my guess is Google started imposing this commission in the rest of the world, because these companies could have simply gone to court. In court, they could have said that, hey, look, they're charging us 30% in the US, but they're charging 0 in India. Mm-hmm. So for the Indian companies, what happened was they went from 0% commission that they were paying because they could build off the Google Play Store to then suddenly having been told that they'll have to pay 30%. So the hit for them was much bigger, but it started because of this need for uniformity that Google, and this is my reading of it, wanted to demonstrate in court. And this issue initially happened, if you remember, just after Paytm's app was taken down from the Google Play Store. And the Indian startup community, they're in a WhatsApp group, a bunch of them, there's like 400 odd founders there. They actually came together for the first time. I haven't seen them come together on an issue for decades now, but they came together to say, hey, listen, we have to fight this together. And I haven't seen that kind of cohesion, and it's become a movement in the sense. They've even formed an organization called ADIF, and they're consciously watching Google's every move. So Google essentially united the Indian startup ecosystem against itself by saying that they're charging 30% commission.
Right. And this brings me to the larger question of Google. It's OTT players versus Google, but for the longest it's been CCI versus Google, and that application of course is with NCLAT. NCLAT has partially upheld CCI's order, saying that Google in fact has indulged in anti-competitive practices by asking manufacturers to pre-install its apps. We look at Google, a behemoth, an unparalleled tech ecosystem, using that ecosystem to its full advantage and being penalized for it, not just in India, Nikhil, but also in European Union, in the US, and there are various rulings which Google has in fact challenged and lost. We are looking at Google indulging in anti-competitive practices in almost every region now.
So the thing is that, there's no harm in a player being dominant. There is a harm in a player abusing that dominance. Mm-hmm. So for example, WhatsApp is a dominant messaging platform, but the CCI found that WhatsApp wasn't abusing its dominance to the detriment of other players. It was just a natural monopoly that got negated. Google has cemented its monopoly by the host of services it has, by the contracts that it has signed. But if you look at it on the other side, Apple has done the exact same thing. When you're in an Apple ecosystem, quite often, earlier you couldn't even find like charging cables that would be ubiquitous in other spaces, right? And so Apple also does the same thing, which is why similar cases there against Apple in the US, and the CCI is also investigating the Apple ecosystem. Mm-hmm. See, the players like Apple and Google, right? When the app ecosystem started booming in 2008 after the launch of the iPhone, these players basically they built an app store which many of us have used to download apps, etc. And we moved from a web-based ecosystem, which was very broad and you could go to any website in the world and see it, to an app-based ecosystem. So it's centralized power with app stores. And these app stores are now largely controlled by other players. So like Apple, hardware company, computing company, device company now controls an app ecosystem for iOS. Same way Google for Android, even though Google spread across multiple players. So this dominance and this potential for abuse of dominance is what is problematic. Until Google imposed this condition of 30% in about 2-3 years ago, no one treated it as an abusive player. Now the perception of Google has changed. The angst when Google does something is greater. Its dominance is being seen very closely. And this is happening across the world. I don't necessarily agree with all the moves that are being made, because look, even with this, when you, let's say that you cannot, there are also security considerations when third-party app stores are allowed to proliferate and no warnings are given on devices, right? Cyber security is a major concern. Just like we saw fake lending apps getting created, and then we asked Google to start taking them down because they were all being downloaded from the Google Play Store. So at one level, you need that dominance to maintain some sort of, security and cleanliness in the space. At another level, you also don't want them to be dominant, so you want competitive players to come up who might not be as responsible and as safe. So it's a very tricky balance to figure out over there.
Okay. And in that tricky balance, I think the key operative word, Nikhil, that you pointed out is abuse of dominance. It's not that Google is dominant and that's a problem. It's how it's abusing its dominance, and perhaps reason why losing all the antitrust rulings, not just in India, but also abroad. We will, of course, keep tracking all those details. Nikhil, always a pleasure speaking with you. Thanks very much for taking time out. With that, of course, it's a wrap on this edition. Thanks very much for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more. Streaming on